Yo, what up traders? Welcome to a new weekly review video where I break down price action. And this week we had FOMC, and FOMC absolutely blew everybody out of the water with the wrong bias. I will explain how you can avoid getting trapped into a bad trade and lose post FOMC and even before FOMC, and that's why we had a profitable week. I'll show you the screenshots later in the video as always, but let's just dive into price action. Right, so let's kick it off with the DXY chart here, right? This is our backbone. We always start with DXY, we compare the bonds, and then we start to look at relative strength before we take a setup. First of all, what kind of market order flow do we have? We have bullish order flow, right? This is important to know when you start off the next week. What is the most likely thing to happen with a daily candle, right? So let's go back to the daily candles here. And I want to focus on Sunday's opening, right? So if we go to, let me see, this Tuesday, Monday, Friday. So this is what we're working with, right? When we're starting the new weekly candle, this is what we are seeing right now. Now, if we see this, obviously we want to go and aim for the high, right? That is what we want to do. That is the bias here. Now, second of all, how are we actually going to get into a trade? I always am a firm believer of premium and discount. It is super important. And I will always use this as my first priority because we're never buy in a premium and we never sell in a discount. So make sure to really adhere to that. Now, we have an inside bar on the daily time frame. This is important to know. Note this down. If you have an expansion candle like this one and you have an inside bar afterwards, a lot of times, and you can backtest this, a lot of times the next candle runs the low of the inside bar before it runs higher again, right? And that's actually what we saw. If I just remove the replay here, right, we can see the low got run of the inside bar and then it moved up higher, right? We're going to focus on the first at the start of the week, right? I'll quickly show you the call out, right? And here's the Discord as always. This was from last week. You can watch last week's weekly review on the YouTube, right? And where I call this drop lower, but it didn't really run. So I just closed it at the end of the day. And then this is what I was looking for on Monday, right? So we have this fair value gap being formed. And basically, the forex.com chart is the only chart that did not go into the FEG, but all my brokers and all other charts did go in there. So we just executed based on that. And you can see winning streak continues. We're dropping, right? And we can see the execution here. This is, let me see. You cannot see me. My camera's in the way, but I will post a screenshot when we're breaking it down. We just see my execution nicely up here, right? And you can see all the previous executions as well. So no fresh account just to do screenshots, you know. That's not how we roll. But let's go back to the DXY chart. Let's go to the 4H, right? So when the week opens up, we gapped down and we ran back into discount, right? So we have a trading range here. And I want to get your attention to just the discount level is important. But what is even more important is that you confirmed a strong low with the range you're using. Now, I often get a question, how do I determine a strong low? I don't know which range to pick, right? Of course, I also have a range guide on my YouTube, but we'll break it down with live price action here, right? Current price action, we had SMT on these lows down here. GU did not take out the respective high, or did take out the respective high over here. And then EU, go back to EU. We did not do that over here, right? So important over here, we have that SMT on these highs, right? Now we actually have a strong range to work with. So the range I just drew on DXY is the same range we have over here, right? So everything is lining up for another run lower based on what we saw on the daily time frame. Then again, what we saw on all the engineered lows being left behind the week prior, right? Because Friday closes off over here. And we have this low here. And we have all the relative equal lows here on Friday being left behind for the next weekly candle. So what is most likely going to happen? We're going to run back into premium over here. We'll use a key level, right? And you guys have hear me say this so often. I use IFEGs to determine high or low of the day, or high or low of the week rather. And we have one over here, and you can use it also for high or low of the day. But we have the IFEG. Remember the paint roller up and down, right? This is now the high of the day, and we fully balanced the rest of the trading range we're using. Now let's go to the 1 hour. You can do two things here. You can straight up sell into premium because we have a confirmed range, right? Then the second thing you can do is wait for a confirmation entry. And that's done by using, again, SMT in the first place. And then we use a CSDOB or an FEG that forms afterwards. There's another one, that's the IFEG. Could also be used. I will break down all three of them here, right? So let's zoom in a little bit and see if you guys can see that correctly, right? We have the strong high. We have the IFEG being balanced at the start of the day. Asia session was an expansion. Now with Asia session being an expansion, you kind of have to be a little bit more conservative when London starts. Often there's a lot of manipulation going on. But in this occasion, the manipulation happened before London open, right? So they created SMT on this high, and then we use the CSDOB over here, right? This is option number 1, which you can trade. And how would you place your stop loss, right? That's also important to know. If you execute here, you always, if you use a confirmation entry, you always put it on the SMT high, not on the dealing range high, because the risk to reward makes absolutely 0 sense. Because think about it, you're expecting a high of the day to be set. So why would we put our stop loss on the high of the range if we already determined that this should be the high of the day, right? So keep that in mind. Now we aim for 2R, right? And this is the power of risk management versus win rate. You always have to figure out in your journal, and that's why journaling is so important. And I know a lot of you guys don't do that, and you're just making yourself less likely to be profitable in the long run, but you need to journal. I have a video on that as well. It's called How to Backtest a Profitable Trading System. Make sure to watch that if you don't know how to calculate your risk to reward and versus your win rate. But I take a 2R most of the time. I take my trades, right? So in this occasion as well, even though I'm right about this daily candle here, we had FOMC later in the week. And if you marry your bias and you would have held for longer, because if I zoom out, right, we also have these lows down here. Now these lows down here, that could have been a target as well. And actually I wanted to aim for these lows later in the week after FOMC. But FOMC did the opposite, right? So if I would marry my bias and hold on to a trade, right, I could have held on to this and then aim for this low, and then look what FOMC does, right? FOMC will just absolutely slip through my stop loss and I would lose a lot of money here. But we use a confirmed risk to reward versus win rate because I know the data in my journal. That's important. And then we take a winner. Now let's just quickly do a screenshot up there. Yeah, up there. I will post a screenshot, right, of the executions, and you will also see the previous executions from the last weekly review, right? And we'll keep doing that so you guys can see the consistency. Now, how do I trade after FOMC or even before FOMC? This is also important to know. Look at that FOMC candle. What I tend to do, I completely skip FOMC day, okay? So doesn't matter if it looks clean, doesn't matter if it's the A+ setup forming, we do not gamble FOMC, even if it looks like the most perfect setup. You should only do that if you're content with losing the money and maybe even more through slippage. And I would never ever do that on a prop firm account, because they will just breach you and they will say you're gambling, and then you lose your prop firm account. You don't do that. So with your personal account, you can do whatever you want. That's your own choice, right? Now, after FOMC, I was actually looking for, hey, maybe we could actually set high of the week here, and it could be a manipulation because we're still aiming for these lows down here, right? Now, the impatient traders would start look for these fair value gaps here after FOMC, right? We had SMT on these highs here, and they would short it, and they will get taken out, right? And then you take unnecessary losses. Just don't do that. What you do, guys, hitting the subscribe button really helps this channel, and hitting the like. If you like these videos, make sure to comment as well. Let's continue with the video. Let's go to DXY, right? So let me go back to the Discord so you guys can see what I was looking out for. So yeah, the market outlook, right? Yeah, let's go to DXY. Just the previous week. Yeah, this one, right? So this was FOMC, and I was actually waiting to see and letting the guys know. Let me see here. Massive drop. We'll wait for London session, see what the structure does. We did hit discount on the 4-hour range, so I want to see what the 1-hour candles do. I want to see a market maker model form before I determine that I'm going back into buy side of the curve. And I'm going to show you how you do that effectively. A little trick I use if I don't know what side of the curve I'm on, I remove one side of the curve, right? So this is sell side, this is buy side. If I put my screen like this, I only see buy side, right? Then we're going into sell side, and this is FOMC, right? So we don't know yet if this might be the low or we're just going to continue. Because if I keep my screen like this looks like a market maker sell model, right? Now with the daily bias in a higher time frame, I was still bullish, so I could not look for shorts. And even if I was looking for shorts, by the way, I would not be able to catch it, right? Because we never went back into premium here, which is a hard rule, right? We want to be a seller in premium. What you can do here, again, we do the same trick. We move our screen that we only see sell side of the curve. And if I just use the replay button here, this is what we're seeing, right? Like this. What do I need to see if I want to look for buys, right? We'll use this as the range high. What am I actually looking for before I start trading? And this is key in why I take so little losses. I do take a lot less trades than most traders, mostly 1 or 2 trades a week, but I also take a lot less losses, and this is the reason. Because I wait for a low risk buy or a low risk sell to get printed, which means if I'm not sure the 4-hour will reverse, I need to see a market maker buy model form. We all know it starts off with original consolidation, right? But if we have a smart money reversal, we need to see a low risk buy form in discount, and we trade the next range that comes out of it, right? This is time frame alignment model. We let this pass, we let the smart money reversal pass, we let the low risk buy pass, and then we use the order pairing technique, as you guys know, which I love using, right? We have a range like this, then we have a key level below it, and literally that is how you trade the model effectively, right? And then you would put your stop like this, and you would, where's 2R? 2R is already here, right? If it forms like this, you don't even have to aim for the highs of the market maker buy model. But this didn't happen, right? So if I would just be feeling FOMO and I want to get in down here, you would get stopped out because it will just run lower and you don't have any confirmation, right? So this is the most powerful way to look at price if you're unsure the reversal has set. I use this every single day. I use it on a 4-hour, I use it on a 1-hour. Back in the day, I even used it on the 15-minute and it worked effectively. But nowadays, I just trade the 1-hour and the 4-hour. It's a lot less stressful. So now I'm interested in what you guys think next week will happen. Let's go to the daily time frame. What do you guys think? Let me know in the comments. Do you think this chart will go lower? Are we bearish on DXY right now? Or are we setting the low and we're going to continue up? I want you to post it in the comments and explain to me why, right? Don't just say, oh, I think bullish. Let me know why you think it's bullish, right? And maybe we'll touch back on that next week. But for now, this is the weekly review. As always, another profitable week. Make sure to hit the like and subscribe button. Also, if you're still inconsistent, of course, you see what we do in the Discord. You can also sign up with the link below. But for now, I will catch you guys in the next video.